Hello, everybody. I'm Ethan Feller, stock strategist here at Zacks. And today we're going to talk about a major development that's brewing in the AI and broader technology sector. Unless you live under a rock, you probably have heard of this up and coming Chinese AI company called DeepSeek. This has really shaken up markets, and I think it's potentially created some exciting opportunities. So I'm going to briefly explain what happened to AI stocks and then briefly share three stocks that I'm really excited about. So this is an article I put out yesterday. As I noted, there's this up and coming Chinese AI company called DeepSeek, and they released their latest large language model on the day of the presidential inauguration, and it slowly started gaining attention, and then quickly over this weekend, the technology community sort of started to freak out about it. So basically what happened is that it appears DeepSeek managed to build a large language model equally as powerful to OpenAI's and to Anthropic's, to ChatGPT. And it seems like they probably did it with considerably less resources. A major boom that's been going on in the technology sector has been Nvidia. And a big part of that is that everyone developing large language models has to buy tens of billions of dollars worth of Nvidia's leading edge semiconductors. So because of global trade policy, China has been receiving very little. They haven't really been allowed to buy these leading edge semiconductors. So DeepSeek has had to, through some creative engineering, figure out how to create these large language models with severely constrained technological abilities. It's not clear exactly how few or how many semiconductors they have. They probably do have some, but it's somewhere between 10% and 50% of what the typical American technology company has done. So the implications of this, it's extremely live. It's not entirely clear how this is going to affect the technology sector, how it's going to affect Nvidia. But if these technology companies can spend less money on the semiconductors, and if they can develop these large language models more efficiently, it could mean that there might be less spending on Nvidia semiconductors. Microsoft is planning to spend $80 billion this year. Half of that is going just directly to Nvidia. Meta announced last week that they're going to be spending $65 billion this year. These are both on building out data centers. So, even if we see a 20% or a 30% cut in the spending going into Nvidia semiconductors, it could have a major change, especially on Nvidia. And Nvidia and the other AI infrastructure companies like nuclear energy stocks and the data center service companies really got killed yesterday because this is a pretty major development. So let's take a quick look at the Nvidia chart. And so it's actually bouncing back pretty aggressively right now. You can see Nvidia's up 6% today, but it fell more than 20% yesterday. We have Vertiv also is another major AI stock that has got hit really hard. It was down almost 30% yesterday, more than 30% actually. And Vistra, which is a utility and energy company that was going to play a major role in the AI boom and powering it. So the capital expenditures is not going to be going possibly as far into AI and these other power sources, because if they can do it more efficiently, they're going to do it more efficiently. What this does mean, though, is that if we can develop large language models more efficiently, then these technology companies might not have to spend as much and they might have more profit opportunities. And it also leaves more opening for spending on other things like software or other technology infrastructure. So we can see that the software ETF has gotten a big bump, right? So they're not going to be spending as much on semiconductors, but now these technology companies, they can start to spend elsewhere. So, all right, I'm going to get quickly into three stock recommendations and that are going to benefit from this and that are doing well. So the first one we're going to look at is Amazon. Amazon, leading cloud computing company, e-commerce. We all know Amazon. It's a great stock, and it has its X rank too. So it's got upward trending earnings revisions already. It's forecasting strong earnings growth this year and over the next 3 to 5 years. It's got 28% annual earnings growth over the next 3 to 5 years, which is pretty incredible for such a big company. It's trading 37 times forward earnings, which is a little bit expensive, but not really for Amazon. It's one of the cheapest relative valuations it's had in years. And if we look at the chart, we can see it just blasted to new all-time highs. So as I noted, if they're going to be spending less on Nvidia semiconductors, but spending tens of billions on Nvidia semiconductors, that's just more room for cash flow and more opportunity for investment elsewhere. So clearly investors have taken this news to be actually quite positive for the big technology companies that benefit from using the AI. So Amazon, number one, just broke out. Great stock, Zacks rank, top Zacks rank. All right, another one, not a too super weird name. Something we all know and love is Meta Platforms. It doesn't quite have upward trending earnings revisions. It got mixed revisions with Zacks rank 3, but it's got strong earnings growth forecasts, almost 20% over the next 3 to 5 years. Forward earnings multiple of 25.6 times, not too expensive. And it too has very strong momentum. Again, this is all-time highs. It's up 3% today. It took yesterday's, showed really good relative strength. I mean, the NASDAQ was down 2.5% yesterday, and Meta finished the day up 2%. So it's a weird and very live development with this. Okay, we're not going to be spending as much on Nvidia, but that means we're going to make more money from AI. So Meta, another one. I wouldn't be surprised if we started to see some upward trending earnings revisions soon from this one. And the last one is a bit of a more interesting one. Not quite as, not part of the Magnificent Seven, but it's TWLO. TWLO is a communications as a service company, and it's really a great stock and a great company. We got Zacks rank 1, so it's got strongly upward trending earnings revisions. It's got earnings growth forecasts over the next 3 to 5 years of nearly 30%. It's got a reasonable valuation of 32.7 times forward earnings, which is quite reasonable based on 30% annual earnings growth. And yeah, you can see, let's look at the stock. It's got really strong momentum, right? I mean, again, this one's up 5% today. It gapped higher here, and yeah, it's just pushing higher. If we zoom out a little, we can see it's well off of its 2021 highs, and it spent this long period consolidating. I've been talking about TWLO in early or mid-late November, and it's continued to do well. And it's one of these leading, we saw strength in software, and TWLO is one of the leading software names. So yeah, I highly recommend watching TWLO. So yeah, those are the 3 recommendations for today. Also worth noting that these stocks have earnings coming up. Meta and Amazon are this week, and then TWLO is in a few weeks, mid-February. So always important to note, those could be binary events, and we're probably going to continue to get more information regarding AI, but these are 3 of my favorite stocks in response to this AI development. Thank you so much for joining me today. I hope you found this video valuable. If you want more content like this, I highly recommend signing up for our latest promo. You can find that at zacks.com/promo, or you can click on the link in the description. Thank you so much. Have a good day.